You can ignore global cues, you can ignore today's GDP data, because frankly, when we are talking about markets now, we really are in the last lap, so to speak. And what is the lay of the land, or what is the market positioning? Let's really understand that. Now, Nifty this week has been on a downward slide. You compare the bank Nifty this week, and especially yesterday's price action. Let's compare that. I just want to make a point here. We'll talk about FI holding and F&O, just coming back to that. Let's compare first the Nifty and the bank Nifty. Now that's the Nifty for you yesterday. It drifted after a flat start. The bank Nifty picked up after a good start. So the bank Nifty suddenly has outperformed. Now let's look at this week's data as well. This week, what do we have? The weekly change. For the Nifty, it's a steady decline of about 2%, and for the bank Nifty, it's a mild outperformance which has started kicking in. So for me, this is an important indicator in which way the election positioning seems to be moving. Now, why Friday is crucial? Friday is crucial for a trader and for the election, especially for the election positioning, because exit polls will come out tomorrow and markets will react to the exit polls on Monday. So the election counting is on 4th, but the market reaction will actually happen on Monday itself. So today the positioning of the market, if you're really in that election trade, I think today is the last stage, so to speak. Now let's look at the positioning. Now this is very, very interesting. Very, very interesting. I've seen markets where when there's nervousness, it's across the board. When there is excitement, it's across the board. But this for me is the sum and the substance of what the markets are. The FI long, has just gone down to 12%. Retail long has gone up to as high as 70%. So we are at two extremes right now. The retail has added longs, and the FI in a sense yesterday has decided to just cut shorts, cut their longs. So two extreme positioning in the F&O market, and that just tells you that how the market in a sense, there's one group which either is hedging or they're going short, they're nervous, they're cautious. There is one group and there's a large group. Retail is a large group now, large and a respectable group now. And they are saying that, okay, we want to approach the election verdict or the opinion poll, movement in the market with long positions. So it's a very fractured market. It's a very divided market, which is good news. But that's the way the positioning is.
Well, yes, that's the way the positioning is right now. So that dramatic fall in the long position, the long unwinding that the FIIs did, and the fact that at the end of it, the FII positioning is just 12 to 13% long versus 87, 88% short. And that tells you the kind of nervousness which is there in the market. And also the fact that just around the corner, we have a big event lined up. And ahead of that, they are definitely going light to positions. But the big question is, Nikunj, does it then set us for a short covering bounce? Because if there's this much short in the system, and let's say the the exit poll tomorrow does suggest that BJP has a clear majority, what are the chances we are going to see a massive rally come Monday and Tuesday?
So again, I'll go back to that point that why has the bank Nifty started outperforming? The bank Nifty started outperforming because I think really if you're talking about the election trade, the trade is FI dominated stocks have underperformed and policy dominated stocks have outperformed. I think the policy dominated stocks and the election trade in some of the policy dominated stocks I think is in last lap. If, and I'm just talking something very contra here, my sense is, and when I speak to some real smart market guys, the sense I'm getting is that on Monday and Tuesday, policy related stocks, especially for those who bought them for the election trade, they may just start reaching, they may just peak out in the short term. However, you may see a bout of short covering in the FI dominated stocks, which are largely banks and which are largely from the large cap space. So today being the last day, and then Monday markets will react to the exit poll outcome, I would make a case, in which we've been making a case, that perhaps go easy or take some profits off the table or chips off the table, whichever language or terminology if you want to connect it with. Take some chips off the table and Modi stroke the policy dominated stocks and shift your capital or shift your trade into perhaps banks, especially private banks, large cap construction, large and some of the large cap stocks which are not dependent on policy. It could be a combination of FMCG, it could be a combination of discretionary, it could be a combination of private banks and discretionary both. But that's where the outperformance, I think, will start kicking in. See, to put it simple, you will sell what you own and you will cover what you're short on. If we are making a case that FIs will come back, which they have to come back, right, they will have to cover their positions. What will they cover? Banks and non-policy related stocks. What will you sell? You will sell policy dominated stocks. We're calling it Modi stocks. That's where the selling will come.
Yeah, absolutely.